It's another exciting day in the world of mortgages. That's right. We are here today to give you your May 2023 mortgage rate update. So here's what's going on in the market. Now, we know on May 3rd that the Federal Reserve raised the federal funds rate 25 basis points. This was their 10th rate hike in the past 14 months. So at every single Fed meeting in the past 14 months, they have risen the federal funds rate. Now, remember, this is short-term borrowing rates. This is your car loans, your student loans, your home equity loans. Anything that's on an adjustable rate is going up right now, your credit cards, or it could just be something like a home equity loan. It's definitely affecting those rates. If you go to get a home equity loan, you're going to see rates are higher right now. Now, when Federal Chairman Powell came out at the press conference after they raised the rate, his exact words were determining whether additional firming policy may be appropriate. Basically, he's laying the groundwork to say that the Fed may actually pause on raising interest rates at the next Fed meeting. Now, of course, it's going to depend on what economic data comes out between now and then. So we'll see what happens. But Chairman Powell also denied any possible rate cut this year in 2023. So he's denying that they're going to cut rates at all. The markets, on the other hand, don't agree with him. They actually have already priced in for 3 cuts this year. So we'll see which one's right. Obviously, we're at the mercy of the Fed for what they do. However, a lot of people do believe that they have risen rates too quickly, too long, and didn't. They should have stopped a couple months ago and letting the economic data get caught up to it, because some of it is lagging data. Now, we are not the only country doing this. Australia and the European central banks, they both raised their rates this week, 0.25%. So it's not just the United States. A few days ago, we also saw that First Republic Bank was seized and it was sold to JP Morgan. Now, JP Morgan did get a loan from the government. The government will not disclose the interest rate at which they loaned the money to JP Morgan to buy First Republic, but that deal has now been done. There are 2 more banks that are in the news as possible issues with them, and we're starting to see their stocks tank and people pull their money out of those banks. And that is PacWest and Western Alliance. So we'll see what happens with those, but the Fed's not going to let your money go. They're not going to let you lose money, but all this does affect the stock market. It does affect mortgage bonds. So where are they at right now? So let me just show you what's going on with mortgage bonds. Okay, you should be able to see my chart. And this is the mortgage bond chart. And what I like to show you, and as you can see how it's up and down, right? This is what we follow every day, telling you if you should lock or float your interest rate and what we think is going on in the market. Now, the past couple of days, you're seeing this uptick, meaning interest rates are getting better. This was expected because we knew the Fed was going to raise the interest rates 0.25%. That does not raise mortgage rates 0.25%. They're 2 different things. So this is good that we've had a little bit of a rally here. We'll see what happens. Looking at the stochastics down here at the bottom, seeing this black line over top of the red line, and it's pretty far ahead of it, shows us that we are in overbought territory. So it could end up flipping and we could see a reversal here, but we will just have to wait and see what happens. And then also with that, a good place, if you're wondering where the rates are, a good place that I like to look is Mortgage News Daily. This is free. Just go to mortgagenewsdaily.com and you can see this exact same website. Now they're telling you what the rates are right now. The only thing that's bad about this is they don't tell you, is this 6.43 a 800 credit score? Is it a 700 credit score? Is it a 25% down person or a 3% down person? So they don't give you any criteria as to where these rates are coming from, but it gives you an idea of something that you can look at. And if you scroll down here, you can actually see if there's any points associated with these. Now, remember, these are just average rates out there. And like I said, we don't know the criteria that went into them, but the Mortgage News Daily ones are at 0 points. Freddie Mac does release theirs every week. So while Mortgage News Daily is at 6.43, Freddie Mac says we are at 6.39. That is released every week. The downside of this is when Freddie changed their systems, maybe I'm going to shoot from the hip here and say 6 months ago, they decided to no longer disclose the points that were associated with those interest rates on the fixed rates. So I don't like that because I feel it's very misleading because there is always points associated when you see average interest rates. So just keep that in mind. And then the Mortgage Bankers Association, so you can see down here, they're showing you points. They're saying the average rate, and this would have been last week, see, as of 4/26, was 6.55 with 0.63 points. So they are showing you that it did come along with points. Now, like we said, since then, rates have gotten a little bit better. There is some of our economic people that we really watch and trust do believe that we're going to see interest rates get better when inflation data comes out on May 10th. You see, inflation data is what's driving the mortgage rates. If inflation goes up, mortgage rates go up. Think about it. If things are costing more to buy and you're going to lend somebody money, are you going to want a higher rate of return or a lower rate of return if inflation's up? You're going to want a higher rate of return, right? Which is why you see mortgage rates go up. Now, as inflation comes down, you will see mortgage rates come down. So on May 10th is our next inflation data reading. It's called CPI, Consumer Price Index. And we're really looking forward to this number because we are expecting it to come down. And the reason for that is 43% of core CPI, that strips out food and energy, that 43% of it is shelter cost. And shelter is a lagging indicator. And when we get to May 10th, it's going to be the first month that we're going to start seeing that shelter cost be over a year old now. So you're not going to see the big increase in the year-over-year number that we had been seeing. So hopefully we'll see the CPI number come down, which is inflation, and then that will hopefully help mortgage rates come down some more. So stay tuned. You don't have to follow this stuff. That's what we do for you. So make sure you reach out to us. We will walk you through this process and help you get into a new home.